Welcome to Market Snapshot from the InCred Equities desk. In this podcast, our expert from the equities research team helps you navigate the stock markets with a quick roundup on the previous day's closing, along with relevant insights. Whether you are an experienced investor or starting out, this podcast will equip you to take informed decisions.
Good morning, everyone. After a very strong session day before, Nifty and Bank Nifty both were seen struggling and both closed near the low point of the day. Nifty was down around 125 points towards the end of trading session, whereas Bank Nifty was down 500 points. Bank Nifty gave up 50% of the gains it witnessed the day before. On an intraday basis, it was up 1,000 points. Out of that, it gave away 500 points. On a closing basis, it was not 1,000 points up, slightly less, but nevertheless, we have seen good amount of fall coming in both the indices. Interestingly, for Nifty, as I said earlier, 24,500 is going to be the immediate resistance based on two things. One, there is a immediate swing high which is placed at 24,500, and from if it sustains about this, we may see a swift move towards 24,700. So that is one reason why we witnessed a fall. Second, this was an important hurdle on account of option writing that was seen in the call side for this particular strike, 24,500. And based on these two aspects, we were hoping for a resistance. Of course, nobody was expecting a 150 points fall. For the simple reason that US markets day before were not extremely weak. And I think this is not the time when one should be looking at global markets and then placing a trade. There was a time when US markets was struggling, they were consolidating, but Indian markets were going very strong. And now it's the complete opposite of that, and we should not be questioning that either. It is going to be volatile for US markets in month of November. For next few trading sessions, it may be in a range for the reason that US will be having elections, and the outcome, whatever comes, that can influence the market. So they might be being a little bit quiet before this mega event. On the other hand, our domestic cues will keep influencing the markets. FIs yesterday sold around 4,600 crores worth in cash. Domestic bought around 4,500 crores worth in cash. As I said, even though domestics are matching the buying, at times they are higher than the selling numbers. But nevertheless, this is one of the most aggressive selling in recent years by FIs. Every day we have seen selling numbers. Even though yesterday it was a paltry sum of 500 crores, it was still negative. As a matter of fact. So that is something that one needs to take cognizance of, because we have seen FI numbers, large numbers also, but consistently sell numbers for the last 15-20 days. That is something which we have not seen for a while now. This can be attributed to the fact that US markets are now doing better. The numbers of the companies are coming in better, so people are switching some money, reallocating the money from India to US. People are also reallocating some assets to India, from India to China. So that is one of the reason why we can be witnessing some outflows from the FI part. US markets yesterday closed marginally down 30 bips, 40 bips lower. GIFT Nifty is pointing towards 100 points plus cut as we speak. In all likelihood, will open on a bearish note, and we may head towards 24,200 to 50. Immediate supports are placed at 24,140. Till the time this is not taken out, we may see a bounce back, and overall at the end of the day, it will be a range bound mode where 24,140 is the support, 24,500 is the resistance. As I say multiple times, levels are sacrosanct and play accordingly. Before signing off, wishing you all a very happy and prosperous Diwali and New Year. Thank you all. Take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.